Even after seeing downside volatility over the last 2 trading sessions, the blue chip index Dow Jones Industrial Average is up 45% from its March lows. This great market performance in such a small period of time, 83 days to be exact, is also something that creates a little fear. It appears that stocks are slowly becoming overbought. This can be seen in the RSI breaching 70. If this is the case and stocks are becoming overbought, what are some defensive stocks that maintain their value, pay a nice dividend, and reduce portfolio volatility? I'm going to give you my suggestions for 3 stocks that will do just that coming up next. Now, before we move forward too far, let me give you my disclaimer. These are not personal recommendations for you. These are just suggestions upon history. Based on how these stocks have performed in the past, it's very possible that they can help you reach the goals that I mentioned earlier. I always advise everyone to do their own research before you transact in the market. Now, with that being said, let's go ahead and move forward to the intro of this video. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Advisors. We are a wealth and investment management firm located in Orlando, Florida, with clients all across the United States. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button and please ring the bell so that you can get an update each time I upload a new video. Additionally, please like and share this video to help me increase the financial literacy of our globe. Each time you hit that thumbs up button, the YouTube algorithm supports my video by spreading it to many other people that you know, and it allows me to grow. Thank you so much. I greatly appreciate all your support. Before we go into today's topic, I want to offer you a free financial planning cheat sheet. This cheat sheet, which is not the easiest to say, but it is very easy to use, it will provide you with a financial snapshot of your overall health right now as it comes to your finances, and it will give you a building point, some building blocks, a standpoint in which you can start increasing your overall financial health, increasing your credit score, and becoming a better investor. If you're interested in that, please shoot me an email at the email address in the description or leave a comment below and I'll go ahead and shoot that over. The Organization for Economic Cooperation and Development released its twice-a-year economic outlook on Wednesday. Something that they rarely do is present 2 separate scenarios. However, in light of the coronavirus pandemic, 2 scenarios were provided. One where the coronavirus continues to reduce, and another where a second wave of rapid contagion erupts in the latter part of 2020. The chief economist Lawrence Boone said both forecasts are essentially equal. There's an equal probability that either could happen as of today. This chart shows the projections for world GDP. The green line was the expectation at the end of 2019. The blue line shows the current impact as a result of the coronavirus shutdown. The red line shows what could happen if a second wave of virus cases occur later this year. This chart shows a geographical breakdown by several developed and emerging economies around the world. Here in the US, it is forecasted that GDP contracts by 7.3% this year and recovers in 2021, with the domestic economy growing by 4.1% in 2021. This is based on no second wave of virus patients. The scenario for the US with a second wave of virus cases is worse, but not significantly worse. This is in part because of the probability of a vaccine being in place this fall. Additionally, the large amount of stimulus money placed a put option on our economy. The unemployment rate in the double hit scenario shoots up higher to 16.9%, roughly 17% in the fourth quarter of this year. Then after that, it only falls to about 10% in the fourth quarter of 2021. Whereas the jobless rate in the single hit scenario shows a 10.4% unemployment rate this year and an 8.2% unemployment rate next year in 2021. So with all of this as a underlying basis for the near term and intermediate term direction of the markets going forward, I wanted to provide you with some ideas and some stocks that you can use potentially to protect your portfolio and reduce the risk in your portfolio if we do see sustained high employment, a second round or a second outbreak of coronavirus cases. These stocks have the ability to maintain their value and to continue to pay a dividend if we see a large allotment of unemployment in the future in a spike in coronavirus cases. So the first stock is Procter Gamble, ticker symbol PG. So Procter & Gamble is a bellwether stock in the consumer staples sector. This company makes many common household products. It is a great probability that you have used one of those products today. This stock has a current dividend yield of 2.67% and a 0.4 market beta, which means it only absorbs about 40% of the overall market risk. As of now, the stock is down 4.3% year to date and outperformed the market during the height of the most recent sell-off, being down only 19% when the S&P 500 was down 35%. The second stock that I want to mention to you is Colgate-Palmolive, which is ticker symbol CL. This is another stable dividend-paying stock that currently pays 2.4%. This is a stock that also outperformed the market by roughly 15% during the most recent economic pullback. The stock is currently up 6% year to date. And our last stock for today, the last suggestion that I have for you, comes from the healthcare sector, and that is Astra Zeneca, ticker symbol AZN. This stock is up over 7.6% year to date, and like the first two stocks, fared well during the economic pullback that we saw in March. This stock outperformed the S&P 500 by roughly 10% from peak to trough. The stock also has a 2.6% dividend yield and continues to be surrounded by takeover rumors by larger competitors, most recently by Gilead. Typically, stocks that are in takeover conversations are prime targets for growth, but this is one of the areas and one stock that I believe from the healthcare sector that will do well and that is primed to pay a good dividend going forward and maintain its value. If this is your first time coming to my channel, I ask that you please hit the subscribe button. Please ring the bell so that you can get an update each time I upload a new video. Also, please like and share this video to help me increase the financial literacy of our globe. Thank you so much and have a great day.